and you've decided to make a different provision in the will not normally supersede the legal provisions that deal with those specific types of assets. Now, conversely, if you don't name a beneficiary either under your life insurance policy, your pension plan, or your shares, you can then decide by your will who will receive that asset on your death.
Great. Thank you for sharing that information. Whilst you're talking, I'm taking notes for myself as well, and I know our members are doing the same.
One thing before I leave, I think the story you've given or the illustration you've given is very instructive, because a lot of times we think that estate planning is a one and done sort of situation. You need to constantly reevaluate your circumstances and make changes as you go along. So if I take me, for example, when I first joined the credit union, I was a single man.
Right.
My beneficiaries were my brother and my mother. Since then, I've gotten married, so I've had to come in and change. At least I hope I've done that. Come in and change my beneficiary is to my wife. I've since had a son. So again, I do need to come in and make those changes to update as my life circumstances change, make those
Right.
updates to make sure that my assets go where I want them to.
Thank you for sharing that. And that is so important what you said. You said as your circumstance changed, you did the updating, the amendments as you went along. Mrs. Francis, I don't know if you have anything to add to this particular question on what Mr. Lee was saying.
Yes, Madam Moderator, I just want to ask, and I was good evening to all participants and my co-hosts. I would like to say, in addition to what Mr. Lee said, in the event that the life insurance is assigned to the credit union, we become the first beneficiary of that will.
Yeah.
And whatever is left after payments of any liability to the credit union, the named beneficiary on this policy will get the balance.
Nice. Thanks for sharing that. And Ms. Senville, Mr. Lee did mention that persons should be updating the information as the circumstance change. Do you find that has been happening? Like, what has it been? Are you going to encourage our members to do so? What are you saying?
That's actually an area that people tend to be a little bit delinquent on. I think one of the things we don't like to think about is the fact that ultimately we will die. And some people believe that in updating their beneficiaries is kind of morbid. But realistically, what we advise members to do is, as often as Deal said, your circumstances change, you should update. Because imagine if Deal with his wife and his son still had somebody who had passed away as a beneficiary. In the event there was any benefits to get, it would be a long, tedious process because you'd have to go get executors and put all kind of documents through the courts and spend money to get whatever your benefits are. Whereas if you would have updated your beneficiaries, the credit union has a distinction of being able to do a payout without waiting for a will to be probated, just because of the special circumstances we have under the law. So it makes sense to keep it current just as part of your planning, because it's hard enough when your loved ones lose you to have to worry about what happens with the money part of it, which is a big strain.
Thank you for sharing that, Ms. Senville. Mr. Lee, which one takes priority? I know you probably mentioned it earlier, but which one takes priority? The will or the beneficiary?
Well, so again, like I said, beneficiaries are a very wide category, but I guess in the sense that we are using it here in relation to the credit union, what is on your credit union form will take priority. So that's what I'm saying. So you need to make sure that whatever you want to happen with regards to your shares, your FI, well, not FIP, your shares, if you have a life insurance policy, that you keep that updated, because whatever you have written on there is what is going to take effect on your death. Regardless of what you put in your will, whatever you've indicated on those documents will take priority.
Thank you for that.
I will also add to that, Cindy, it takes priority, and sometimes we have difficulty in determining who is the real beneficiary. Because in some instances, as Ms. Senville mentioned earlier on, persons may have their parents, and circumstances have changed, and they have not changed their parents, and their parents has passed. So now we have a case where we have named beneficiaries, but the beneficiaries no longer exist. And circumstances have changed, and there's a family now, a wife, well, spouse and children. And we can't pay out that payment to anyone. So there's a process that we have to go through again for the courts, which is called letters of administration. And again, some of this, based on not having a will, could be a very tedious process in order to get the member's family the funds that may be assigned to them. So it's important, again, to reiterate that having a named beneficiary as your circumstances in life change, as Mr. Lee mentioned earlier, to update your beneficiary as frequently as possible as life changes.
Nice. So I'd like to encourage our members who you're on this discussion this evening. So I'd like to encourage you to come in, ensure that you update that information, come in and update your beneficiaries, because that is very important. So Mrs. Francis, I'm going to ask you that question. Why is it important to select a beneficiary and Mr. Lee to write up a will? Why is it important? I know we're discussing it, but some persons we still want to know.
Okay, it is important to have a named beneficiary. In some instances, as we said earlier, in the event of death, not sickness or anything, your beneficiary at the credit union against your account is in the event of death, where the credit union pays a premium monthly for every member with a share account and a loan account. In that instance, it is of no cost to the member. So we want to encourage that our members name a beneficiary. At the time of membership, on your membership form, you will have a space where it says nominee or beneficiary. You need to put an individual there. In choosing your beneficiary, we cannot tell you who to put as your beneficiary. But again, based on your life circumstance, somebody who you'd want to designate, who would make sure that who you will make sure that will take care of your affairs after you have left this life, is the person that you should have as a designated beneficiary. It is important because it's somebody that you need to trust, who most likely will take care of your children while you are gone, because you may name your children, but you may need to put a tutor in place for your children so that they could administer the funds that you left for your children in the proper manner. Again, you may be young and you may want to leave your parents because you don't have a family in terms of a spouse or children to leave. Some persons, based on the relationship they have with a grandmother, an aunt, a cousin, and it's all because it all stems as to the relationship that you have with an individual that you would want to name as your beneficiary. And again, it is so important to say, as your life circumstances change, you would review, revise, and come in to change and update your beneficiary if need be.
Thank you for that. Mr. Lee, why would you think it's important for anybody to write up a will?
And I'm going to circle back to something Rita just said, but a will gives you control over what happens once you pass. Your estate, meaning your assets, get dealt with in one of two ways on your death. Either via intestacy, in which case the law decides who gets what, or via testacy, which is you have a will where you have decided, I want X to go to Olive, I want Y to go to Rita, so you decide exactly who gets what out of your will. Now, Rita raised a point a while ago where she said that you may want to leave your name of your beneficiary as your children, but your children might be underage, and you may need to appoint a tutor. Where do you appoint that tutor? You do that in your will. So the two things can work together, because what will happen then, children are not really able to hold these assets if they should pass before they achieve the age of majority, before they turn 18. So you'd want to name somebody who will then be responsible for looking after your children and taking care of them when you have passed. So these are the things you can do in your will. So your will is not just only about your assets, but it also, if you have underage children, says, well, who is going to care and for them, who is going to house them, who's going to look after them. If you have elderly parents, you can make provisions for them in there as well. So, and a will is basically, you can put anybody you want as your beneficiaries. So again, with our system, like I said, you have two ways, intestacy and intestacy. The problem with intestacy sometimes is that the law names very limited persons who can benefit from your estate. So for example, if you are a man who has never been married or has been married once, sorry, any children you have outside of that marriage will not inherit on intestacy. But if you have a will, you can decide that you're providing for all your children. You may have a friend, for example, who has been very good to you through the course of your life, and you want to make some provision for them in your will. You can do that. Whereas again, with intestacy, it is purely blood relations coming down the line. It may be people you don't even talk to, which is what has happened in some cases where, because persons have not left wills, the persons who inherit from them are persons they have no relationship with, they don't talk to, they've never wanted to benefit in any way. So the control having a will gives you, and as Rita said, life is uncertain. Oh, sorry, Olive said, life is uncertain. We don't want to think about our death, but it is the one thing that all of us are going to experience. Having a will allows you to plan way ahead of time for what will happen in the event that you pass away.
That's some very vital information that you are sharing with us this evening, Mr. Lee, and I'm hoping everybody else is taking as much notes as possible. Ms. Senville, I'm going to jump over to you. If someone falls ill or is in a coma, what happens? How do they access their funds? What happens?
I think I want to refer that one to the legal man among us, because if you did not prepare and you fall into a coma, then we in a legal quagmire that needs handling. And I think the best person to speak about that.
Normally what would happen is persons put in place what's known as a power of attorney. Now, the power of attorney only operates to the extent that you are mentally capable of granting it. So if you're ill, but you are still compos mentis, your mind still works, then your power of attorney will operate, and whoever you've given that power of attorney to can access your funds, can act on your behalf. If unfortunately you fall into a coma and you can no longer give instructions or confirm what is being done by your attorney, a separate process then has to be followed, and an application has to be made for what's known as a curator. Now, again, there are two forms of curatorship. Somebody can be appointed only to your assets, so they just take care of your assets, or they can be appointed to care of you and your assets, in which case then they're responsible for your health and well-being. That is a legal process. An application has to be made. The court has to be convinced that you are unable to take care of yourself, and then they will grant that application to whoever has made it.
Thank you. So, Ms. Sanville, in that case, if somebody wants to access their funds, they have to go through the lawyers before they could come to Jannou.
Well, because we only know the member. If somebody else comes instead of the member without some sort of legal authority, we will not be able to recognize them. And we can apologize for that. We're sorry.
So in that case, what are the benefits of insurance or the FIP that we're actually offering?
Okay, that's a good question. While we're talking about wills and trusts and after passing, it's also possible during life to do some level of preparation. In the scenario that you raised, where this gentleman had this registered retirement account and he had his life insurance, one of the things I noticed you didn't mention was that he didn't have medical insurance or the FIP, the Family Indemnity Plan. Now, with medical insurance, he would have had some level of coverage of his expenses while sick. And it so happens that we have a group plan that we have on offer for our members, that there's some maximums, there's some things which are covered and some things which are not, but at least you have the ability to make a contribution towards your medical expenses. So one of the things, as we get older, there'll be some guarantee that the amount needed to keep us in good health is more and more. So that's an avenue to help manage your expenses. And in addition, there's also a life component of the medical insurance. It's small and you can't access it how you would like, but it's possible to get up to $50,000 as a life insurance component on the medical, well, upon the passing of your loved one. But that's another benefit that your family could have in addition to covering your final costs before passing. Now, you made specific mention of the FIP, which is the CUNA Mutual Family Indemnity Plan. And that's a plan which we're particularly proud of. It's a subscription plan where each member needs to pay every month an amount. And the amounts that you could sign up for range for from $5,000 up to $30,000. And you could pay from $26.40 to $158. But what it does mean is, upon your passing, that your loved ones are able to, within 48 hours, they promise, but sometimes up to a week of your passing, have funds to prepare for your departure from this life. And some of these funds make it very, very easy or less tedious, because again, losing a loved one is hard. And if there's a way that you could manage some of these final expenses, then it makes sense. And now that CUNA has also put in this critical illness rider, this gentleman you spoke of in this story, he would have been eligible for the critical illness rider if he had the FIP and had signed up for the critical illness rider. And this rider would have given him a maximum of $15,000 or $30,000 once he got diagnosed with the cancer. And with this, his family would have had steps towards covering expenses, which would have meant that the final amount that he would have left for them could have really been managed in a better way, if I could say that. So while we think about wills and trusts and everything as after death, sometimes, in life, we have to put some of the steps in place, not just the life insurance, to enable us to show the full amount of financial love that we would like to give to our family once we have left this life.
Can I just indicate as well, Mr. Lee mentioned, based on your example of a coma, that once a person is not legally dead, but may not have the sense enough to make the decision, they may have to get a curatorship. I would just like to add, a curatorship could also assist in the event that if there's a power of attorney, that someone could assist an individual, and we've been seeing it becoming of late, that most of our members are getting aged, and they may need a curatorship because they have dementia, or they may have some other ailments or the other, and they cannot come into the organization, they can't sign, they cannot make sound decisions for themselves. So curatorship is also a form of assisting the member access their funds while alive and not having a power of attorney. Mr. Lee, you can expand on this a bit if you don't mind.
Yeah, sure. And you hit the nail right on the head. The curatorship really applies where somebody is no longer able, for whatever means, to look after themselves. And unfortunately, like you said, dementia, Alzheimer's, those sorts of neurological diseases are becoming more prevalent, and you are getting more and more curatorship applications having to be made. And I mean, having been on the other side of it and dealing with persons who've made the applications, it can be very tough on them, because you're dealing with somebody, oftentimes it's a parent, it's somebody who's been taking care of you, and it's now you're facing a situation where they can no longer take care of themselves. Whether you really have to step in and be like a parent to them. And so it can be very hard psychologically, but it is a necessary process, unfortunately. And once you are able to prove to the court that the individual can no longer take care of themselves, they no longer have the mental or physical capacity, it covers both mental and physical in some cases, you are able to step into their shoes. And literally that's what it does. You step into their shoes and you're able to do any and everything you need to do for them.
So the curator, explain again, how is the curator, how do you come up with the curator? Because I want to know, like, how would the loved one be able to access? Can anybody just walk up to Miss Senville and say, my mom is in a coma?
No. So you have to, as I said, you have to apply to the courts. You have to get a court order which says that you have been appointed as curator for this person. You can have a limited curatorship, which is for a period of time, or it can be indefinite. But you have to go to the courts and they have to present a court order. They can't just show up and say, well, I'm a curator with nothing further. It is a legal process.
Great. Thank you for sharing that. Now, in the absence of a will, Mr. Lee, what happens if there's no will, there's no beneficiary? How does one move forward? Well, not move forward, you're dead, but how do you handle something of that nature?
That's when things get really, really, really complicated.
Tell me about
it. What's that?
I say, tell me about it.
Yeah, it gets really complicated. Because what happens then is you then fall into intestacy, as I said, and your succession is then determined by the law. So the law decides who can receive your assets. Initially, it will be if you have children, it'll be your children. If you have a spouse, it's what's known as a spouse capable of inheriting. So just because you have a wife doesn't mean your wife automatically inherits from you. If you are married in community where everybody shares everything 50-50, your wife is automatically entitled to take 50% and just go about her business. But for some people, you may have more assets outside of the community. So what happens is the wife has to surrender. I'm using wife, but the spouse
Right.
has to surrender their interests in your community, in the community, sorry, and then joins as one of your heirs. If they decide not to do that, or they've passed away for some reason, then your parents might possibly become entitled. If your parents are deceased, then your siblings may become entitled. If your siblings are deceased, then it starts going down the chain, and it can become very complicated. And as I indicated as well, worse yet, if you were born out of wedlock or your heirs are born out of wedlock, they may not inherit at all. So if you're a man, for example, you had 6 children before you got married. You get married and you have 1 child. According to our law, that 1 child is entitled basically to inherit all of your estate. The 6 children you had before get nothing. If the concession that was made was that, if you are not married and you have taken care of the children during their life, then they can inherit. But you see, you have all these additional steps that you have to fulfill before you can inherit, as opposed to a will where you say exactly who gets what. And that's a summary and a simplified version of how complicated it can get.
Yes, it sounds like a very sticky situation, and I don't think anybody wants to be in such a position. It sounds really complicated and very expensive. Mrs. Francis, I'm not too sure if you have anything to say in that light. Or Ms. Senville.
Well, I'll add to that we've had quite a number of cases. And of course, the complication that Mr. Lee spoke about is real. I'd just like to let our members on the panel tonight know this. It is a real situation where we have wives coming in, a spouse coming in, sorry, children coming in, parents coming in, sisters coming in to claim against an account, and there's no beneficiary. And you have a deceased member you need to get buried. You understand? So it is a really sticky situation. So it's important, I will say again, to have a named beneficiary and to change it as often as your situation changes. Because as Mr. Lee said, if there's no beneficiary or a beneficiary has passed away based on what you nominated at the credit union, it makes it very difficult to get access to the funds to take care of your burial, and more so, to share among the individuals you would really want to have that money shared with.
Nice. Ms. Senville, anything from you?
I think the biggest takeaway from all of this for me, and I'd like to encourage all members, is the law says that the last copy of the beneficiaries that we have on file that's stamped and signed, we must use. So as often as you want, if you get angry if everybody tomorrow change it and come next week and change it again, it's only paper, and we'd prefer that you keep it as updated as possible, instead of, as we've seen, when you first joined the credit union 20 years ago, you had met Miss Wonderful who proposed you for membership and you put her name. But subsequently, you met Miss the love of your life and you all had these children and you never updated. So the money you put into your account is still in the name of this person. And in some cases, the people aren't even on speaking terms, and the money is pledged to them. That's what you have done by making them your beneficiary. So it makes more sense to have a regular updating where you can ensure that the people who need your care at that point in time, because whoever you had last year, maybe the circumstances have changed and you have somebody else you want to help out or you want to leave as your beneficiary. So it makes sense to stay current. It sounds morbid, but it is way better to ensure that the people you would like to have the benefits of your lives work, and that you want to give the gift of this love and maybe this head start for the future, that you take control of it and don't allow the court or other persons to tell you who should be the ones benefiting from your life's work.
Yes, and as we discuss, and we keep saying, it's very messy when we don't. It's very complicated situation. So, like Ms. Senville is saying, we know our members are on this live tonight, so we're going to continue encouraging you as your life circumstances change. So, should that form come in, do the updates. So, my next question, I will throw this question at Mrs. Francis. At what age, Mr. Lee, at what age can we select a beneficiary or write up a will? Is it something like at any age? How does it operate?
Oh, well, in terms of writing a will, anybody who is of the age of majority can execute a will. So once you turn 18, you can write your will.
Nice.
With regard to the beneficiaries, again, I think once you're 18, you can nominate a beneficiary. But I'll leave that to Ms. Senville in terms of what's actually in your documents.
Well, that's actually a very interesting thing of dealing that the credit union has a distinction of being able to have a 16-year-old join the credit union.
Right.
And once a 16-year-old becomes a member, we ask them to define a beneficiary on their form. So from 16 in the credit union, a person can define a beneficiary. Usually it's the parent or siblings.
Okay.
Thank you for sharing that. Let me tell you, the persons on the live, we are seeing the questions coming in. Mr. Alexander, Tyrese, I'm not too sure if there are any questions in the chat room that we could throw at our panelists right now.
Yes, good evening, everyone. One of the questions being how frequent can you update your beneficiary? I believe Miss Senville answered this one. You could come in, like she said, you could come in 1 week, and by the following week, you can make a change. So it's as the changes are made in your life, then you can update the beneficiary accordingly. We have a second question. Can one name more than one beneficiary?
Yes, there's no restriction on how many persons that you can have as your beneficiary. It's just about naming them and deciding what proportion that you'd like to allocate to each person. We will honor that request.
Okay, thank you, Ms. Senville. The following question is, what about a trust? Is this option available in St. Lucia?
Yes, you can have a trust in St. Lucia as part of your estate planning. I read through that question. The way a trust works, essentially, you appoint somebody to be your trustee, and then you assign your assets to that person, but with directions as to what they're supposed to do with it and how they're supposed to use it. It can be a fairly complex structure, but it is available for the right persons. It does serve and assist with estate planning.
Understood. And the following question is, if a will is done when single, does it become void when one gets married? Would you have to redo the will after marriage if you want the same conditions to apply?
Yeah, that's an excellent question, and yes, a will done well becomes void on marriage or divorce. So again, your changing circumstances really require you to stay on top of your planning. So I have actually advised quite a few persons who had a will, they got married, they didn't want to change anything, but the mere fact that you've gotten married in the interim, you have to redo the will. And then similarly, if you get divorced, you have to redo the will as well.
Right, understood. And back to the question about the trust. There was an extension to it where the member indicated that from her understanding, a trust allows for immediate access to beneficiaries. However, in the case of property, where title has to be changed, what would be the procedure? Does one have to engage an attorney, or can one go directly to the land registry department with the necessary paperwork and make a request for change in title of the property?
Well, okay, so again, a trust is not necessarily related to death. You can create a trust whilst you are alive and put your assets in it. And as I said, you appoint somebody to manage those assets and control them. So as regards property, if you're creating a trust over that property, from the time you create the trust, the property would be vested in the trust entity. You can give directions that at a certain point the asset is to be transferred to a specific named beneficiary, or is to be sold and the money given to them. And at the time when that has to be done, whatever necessary formalities have to be undertaken to transfer the property or sell the property would have to be done, yes.
Thank you. And the very last question is, what costs are associated with a trust?
That's a little difficult to answer off the top of my head. It really depends on the assets and instructions and how complicated the structure is.
Understood. Thank you, Mr. Lee.
Harry, so you said that was the last question from the chat room?
Yes, correct.
Thank you so much. The information here this evening is thought-provoking, and there's just so much to take away, right? And the members are asking so many questions. It almost feels like we have to pay for a session with Mr. Lee the next time. So a next question, I think that was answered earlier. What happens to a financial accounts upon an account holder's death? So what happens to a financial account upon the account holder's death? Ms. Senville, would you mind answering that question?
That's a good question. If they've got a named beneficiary, then upon their death and the provision of the death certificate and identification of the beneficiary, then we would now start to interact with the beneficiary with regards to divesting the account of the money and making it available to the beneficiary. In the event that there's no beneficiary, or there's an issue related to identifying the beneficiary, then suddenly now we go into the complex situation that Dee was talking about, of trying and identify or getting some legal paperwork to access that money. But in the event that there's not somebody who can be identified as the person to benefit, until we get information from the courts, then we would be unable to proceed with anything related to the account, once we are aware that the person has passed, of course. I don't know if Mrs. Francis wants to add anything.
Yes, I would like to. In the event of death with our members, once we have the legal documents, which would be the death certificate, the ID card, and so forth, and the members beneficiary, well, it doesn't necessarily have to be a beneficiary. That somebody comes in and indicates to us that the person is dead, and we don't have a named beneficiary, we could start the process via CUNA insurance, which I said earlier on. We have both life savings and loan payments insurance on behalf of the members at no cost to the member. Currently, our life saver is up to $30,000. That's your shares are insured up to $30,000, and it's prorated over periods of ages. Your loans are covered up to $60,000 at the maximum. So in the event that this individual passes, once the member passes after more than 6 months after they've taken their last loan, we would supply CUNA with the information, and CUNA, under certain circumstances, will acknowledge the payment of the debt. It all depends on whether it's a suicidal death, an accidental death, or natural causes, or any terminal illness related diseases. There's some of them could be very complex. However, there will be some back and forth with CUNA, but in some instances, we will recover the payment of the debt. Where the debt is in excess of $60,000, we would ask that the member gives additional life insurance to cover the debt. So in the instance of a mortgage, the member would ask to cover the difference of that $60,000, or sometimes even more because of the magnitude of the debt. In cases of that, also, we would have the life insurance, as Mr. Lee mentioned earlier on. There would be a beneficiary, but once the life insurance is assigned to the credit union, the credit union becomes the first beneficiary of that account. So in some instances, we will get CUNA to give us part of the money, and the life insurance will come in and pay the difference, and the balance we give to the beneficiary if there's any. However, in the case where there is a debt and there is no life insurance to cover, the beneficiary in some instances would say, okay, I can take over that debt because there is an asset that I am entitled to. Maybe land, it may be property. then the beneficiary would then take over the debt and pay it in terms of, if the beneficiary is a member, the beneficiary will now take a loan and clear off that amount. In the event the beneficiary is not a member, we cannot go after the beneficiary and say, you have to pay that debt. We will have to go after the member's assets, whether they have any other monies at a bank or any real estate that they have. So we have to put a claim against that money to pay our debt. Mr. Lee, on the legal end, I would like your assistance in that area, because sometimes these are the things that we are seeing likely to happen now, because sometimes you are of the view that persons are paying the insurance, not until sometimes the insurance lapses. That's when the insurance company sends you a notice. What they do, they eat into the cash value of the policy to pay that premium, and when there's $0, oh, you get a notice indicating this policy has lapsed. So it's an area where we must be very, very cautious with that. In instances where there's an unpaid debt not being able to be paid by CUNA, that we can go over some legal form of asset that the individual may have to pay the debt and not the beneficiary. Because sometimes the beneficiary they named at the credit union may not be the one entitled to the asset. Mr. Lee, can you give me the legal assistance on that area as well?
Well, I think you've covered it fairly well, to be honest. Yeah, that is a concern. That is a problem that can arise at times. We've been talking about an estate and succession as if there's always going to be a nice sum of money waiting for you. But you're right. In some cases, there are actually debts that attach to those assets, and they have to be resolved in some sort of way. You can't force a beneficiary to take the asset with the debt. But if they want to enjoy it, then, like you said, they would have to settle the debt in some sort of way. So it is worthwhile ensuring that you have insurance and that the insurance is up to date, because the insurance companies, you're quite right, are very happy to take your money, use your whatever savings you have to pay down your premiums if you stop paying, and then leave you in the hole at the end of the day. So I think the one thing to keep in mind is that you can't set it and forget it. None of these products are set it and forget it. You always have to keep on top of them. You have to keep monitoring them and make sure you're aware of where you are.
Thank you for sharing the information. Now, Mrs. Francis, you brought that up, and that actually segued into one of my last questions, and that was how are debts paid after the debtor's death? And you covered that very well with that response. So my question is, what kind of authority does the beneficiary have? Because right now I'm saying to myself, I'm not too sure if I want to be anybody's beneficiary if they have any debts attached to that account. So what authority does the beneficiary have?
Well, the authority the beneficiary has is to collect the dough, collect the cash that the member left behind. The authority the beneficiary also have left up to their discretion is to ensure that the member gets a good burial. And in some instances, we see that quite often, that the named beneficiary comes in and says, listen, I need to get some funds against the member's account so that we could give the individual a proper burial. And it's not just all about receiving the money that she has left for us, but to ensure that this person gets a decent burial. In some instances, we can assist, but in some instances, the debt is so much higher than the available shares that they have, which is what the beneficiary will be entitled to. We can't. But in instances, as I would say, that the member can, we have acknowledged that they are the beneficiary, death certificate and all the legal documents are produced to us based on an open bill from a funeral home and the amount of money on the account, we can assist in the payment of the burial expense. But again, the beneficiary collects what is left at the organization in terms of shares, deposits, permanent shares, and the payment of the debt is that of the credit union via the CUNA insurance. And if there's any excess debt, of course, before we pay all of the shares, we will have to pull from that as well. So again, it is important that you make the right decision in terms of who you're going to leave your your benefits for, and of course also protect your loved ones, as Ms. Enfield said earlier on, that you put insurance in place, you pay the insurances, because you've worked hard and you want to leave something that your loved ones could remember you by. You don't want to leave debts for them. So you cover these through the necessary insurances and debt protections that you may have to leave comfort for your beneficiary in the end.
Nice. Thank you for that, Ms. Senville. Anything to add to that?
I don't think so. I think they did such a good job. There's nothing more I can add.
Okay, great. Tyrese, I know there are some more questions. We have 9 more minutes. Do you have any more questions coming from the chat room?
Yes, Ms. James, we do. So the question is there a specific legal requirement for a will to be considered valid?
Yes, that's an excellent question. St. Lucia is somewhat unique in some ways. We actually have 3 types of wills you can do in St. Lucia. The first type is what's known as a holograph will. And so on, all 3 types have different formalities and different requirements to be valid. The first one being a holograph will is the simplest and easiest one to make, in the sense that it has no formalities whatsoever. All that's required is that you, as what we call the testator, the person who's making the will, write the will in your own handwriting and sign it. You don't have to date it. You don't have to have any particular form of words, anything. Once it's in your own handwriting and your handwriting can be proven, that will be sufficient. You then have what's known as an English will, which is where you have you as the testator and 2 witnesses, one of whom must be a JP. So again, you have your will properly laid out. Again, the peculiarity of this is that each page must be initialed by yourself and the witnesses. Now, the witnesses can't be related to any of the beneficiaries, so anybody you're leaving things to can't be a witness to your will. And there's some restrictions in terms of if they relate to each other and so forth, which will take a little while to go through. But there are some requirements with regard to the witnesses. And similarly, the witnesses and the testator must all sign at the same time in the presence of each other and see each other signing. So you can't sign it today and bring it for the witness tomorrow and have the witness sign it. It won't be valid. The third type of will is what's known as a notarial will, which is done before either 2 notaries or 1 notary and 2 witnesses again. The advantage I find of a notarial will is you're engaging professionals who know what they're supposed to be doing, and the chance of it being invalid later on are much less. But obviously, it's a slightly more expensive process because, again, you are engaging professionals to put the will together.
Thank you for sharing that. Tyrese, any more questions?
Yes, we do. The other question is, the scenarios mentioned are for single accounts. However, if your account is a joint account, doesn't this joint party automatically get access to the accounts in the case of being in a coma or illness?
I'm not sure exactly how the credit union structures their joint accounts. In some cases, it depends on how the account is set up. So in some cases, it's either party to sign. In some cases, both parties must sign. So if it's either party to sign, then yes, if you're in a coma, that's fine. The other party can continue to sign and access the funds and look after you and look after themselves without any issue. If it's both parties to sign, then obviously you see the difficulty, because if you're in a coma, it means you can't sign as well. And you would have to go through the other processes that we outlined before.
Right, understood. Thank you. Ms.
Any more
James,
questions?
on to you. I believe that was the last question. But
Thank you, Mr. Alexander. Okay, so it looks like.
But just I think I want to almost do a little bit of a sum up. Part of what makes the credit union different is that it's possibly easier to do some things at the credit union than you would do at other places. With the share and the loan insurance that Mrs. Francis mentioned that the credit union pays for, it's possible for you to get up to $30,000 of shares insured, or if you die accidentally, get $60,000 if you've saved up to $30,000, of course, to leave for your beneficiaries, plus your $60,000 of loan forgiven because of the insurance that's paid. And if you put that together with your FIP, which will allow you to cover the cost of the funeral, plus with the medical insurance, which would allow you to cover the cost of if the person is ill towards the end of their life, and the life insurance component of this, however small it is, together with your life insurance that you'll take otherwise, plus the other financial provisions that you make, you really see that it's about planning, making the plan, working the plan, and committing to the plan. And in so doing, you don't have to do all at one time, because some people believe that it's tedious to do. But if you start today, at least in the first step, you take some medical insurance for yourself, or you start at the lowest level of the FIP, or you start the process of making your will today, or even just itemizing what are your assets. Because you'll be shocked to see people come to us after the passing of loved ones saying, was my mother or father or brother or sister a member here? Did they have any money? Just to document where you have, what you have, so that the seek and go find mission many relatives have to go on, is reduced. So I think it's about careful planning, documenting, and sharing information, because we tend to be secretive about money and assets, and maybe that's a secret we shouldn't be keeping anymore, because it's hard enough losing a loved one without having to scramble for information, and possibly losing assets because you didn't know that somebody had, or there was a loan, they'd loaned somebody money somewhere and it wasn't documented, so that the $100,000 that your father had loaned Jane is pending because there was no formal document for you to see, because it wasn't documented somewhere. So I don't know if Deal wants to add anything to that, but I think it's about the plan, writing it down, documenting it, and sticking with it.
So, Mr. Lee, your final words, no pun
Oh.
intended.
Yeah, I think Olive encapsulated the discussions very, very well. Like I said from the beginning, it's really about making sure that your arrangements match your particular circumstances. And you need to make sure that you are constantly reviewing and ensuring that whatever arrangements you do have in place meet your needs and your requirements. And she also made the point, I think, oftentimes we are very shy with regard to financial information for whatever reason. We like to keep our business to ourselves. But oftentimes the problem is left behind when we are gone, because we haven't been clear with people, because we haven't told people exactly where things are, where to look for things, whether we have a will or not, for example, just basic things like that. So I think we need to be open with our planning with our loved ones to ensure that we include them in what we are doing.
Nice. Thank you for that. Mrs. Francis, final words?
All I would like to say, if you love your loved ones, as you said, just make sure you put the right plans in place. Update your beneficiary so your loved ones are secured when you're gone. Thank you.
Thank you. So lastly, I would like to start by thanking you all for this valuable and thought-provoking discussion, Mrs. Francis, Ms. Senville, and Mr. Lee. I would also like to thank the marketing team for organizing and the IT department for helping me to set this all up. My deepest gratitude goes to all who are in attendance, and there is so much for us to take away. My key takeaway: as my life circumstances change, I need to update. So I'm encouraging our members who you're part of this live. There are 54 persons on this live right now. So I'm expecting persons to be calling tomorrow so that they could update the beneficiaries. They could make the different changes that has to be done. Okay, so don't wait for last minute. Do it right now. If I could have sent you the forms right now, I would have done that, but time wouldn't permit me to do that. So I'm encouraging you tomorrow, give us a call, or you could visit us so that we could make those changes, or you could visit our website, www.jannou.org, or call us at 452-4807. And the retirees, I'd like to thank you so much for helping me out as my co-host. And to all those on this virtual discussion, I hope that you have a lot of information to walk away with this evening, and hopefully we could have some more of this. I'm guessing the next time we will have to have some other arrangement with Mr. Lee, because this was a very informative session, and we thank you so much for spending this time with us. And Ms. Senville, you're in the comfort of your office, so I'd like to thank you for that. And Mrs. Francis, thank you for giving me the go-ahead and telling us, yes, we need to do that. So that's where I say good evening.
Good evening. Thank you very much.
Bye
Good
bye.
evening. Thank you. Bye-bye.